Hey guys, welcome to the channel. So today I'm going to break down one of the best trades I've had this year. This was on the British pound against the New Zealand dollar. So you see the initial entry was here, which yielded just under 400 pips, was around 360. The second position here was just under 200 pips. So huge return. Um, Initial entry was the first entry was actually here. However, I used the wrong lot size. It was way too small, so I just closed this one out and then re-entered afterwards. So this this trade was just following the echo model. Along with, if you watched my previous video about scaling into trades, you'll have seen this trade explained there. And I was still in it at that point. However, I've now closed out. So I want to explain it in a bit more detail. So what we had was a very clear move to the upside. This was a very strong market, and we knew that the pound was a lot stronger than the dollar because over the recent months, the British pound has been the top performing G10 currency, and the New Zealand dollar has been performing pretty poorly. So I knew I wanted to catch this trade. So it was around this sort of period here that I was looking to go in for buy positions. However, I viewed the market as too expensive. It wasn't in a great place to buy. So I was waiting for the pullback, which we got here. However, I missed this. I wasn't really paying attention, which was a bit unfortunate because I could have had an even larger of a gain. But that's fine because we did get in eventually. So we knew we wanted to buy. The market was in an uptrend. So how did we actually get in? Well, we saw price sort of consolidate around here. We came down to the moving averages. So this is the 50 and the 200. So this was a great place to buy. I was still very confident in the driving factors of this position. So what we did was wait for the conditions to be met. So the RSI didn't quite reach to the oversold level, which isn't the best. However, because I was so confident in the trade, I was quite happy to sort of sit out and just overlook that. It was fine. And the reason was mainly as well because we had the GoldenGates Algo, which was oversold. So that was at least one of the conditions met, along with the moving averages, the market trend, and the driving factors were fine. So we entered, and that was it. So the stop loss for the position was, let me just try and move this across a bit. So for the stop, we obviously needed quite a wide one, just in case we came down to create a double bottom down here, or triple bottom, I suppose that would be. So stop loss was just slightly below that. So this wasn't, this wasn't some crazy trade where there's no drawdown, because there was, to be quite honest with you. We had, all this consolidation here. There was moments where I was like, oh dear, have I gotten too late? But like I said, I was quite confident in it. So that's why I just left the trade to run through the consolidation. So after we had the move to the upside, which was great because we formed a new high. This was obviously a higher high in an uptrend, which is a great sign. We then saw the classic echo entry model, which is the pullback to 200. We had the GoldenGates entry signal here. So we had the RSI become just slightly above oversold. We had the GoldenGates Algo oversold. We came down to 200. After we had the GoldenGates entry signal, this was my sign to get back in for a scale-in position. So on the initial position, stops were at break even, so it was risk-free. So then we entered the second position with 1% risk. So within the two positions combined, we had 1% risk, so it was completely fine. We didn't actually reach take profit. So take profit was at the daily highs. So take profit was here. Oh, no, sorry. It must have been here. So take profit was here. And obviously we fell quite short of that. And what ended up happening was we reached this high here and rejected. So I wanted to stay in the trade. I wanted to see if this was just a brief rejection before we, plowed through and continued higher, which we didn't do too quickly. In fact, we're still not done. So in my mind, it was quite a good idea to just close the position and get out. I can't find where I am now. Hold on. Okay, here. There we go. So keeping that in mind, we had the position scale in here. And if you watched my other previous video about pivot points, you'll see here we rejected S3 and opened at the previous level of S3, which was a great sign for me. Obviously, like I said, we had the GoldenGates entry signal, so it was a great trade. After we rejected this daily high, and then we couldn't seem to break through, we couldn't seem to get any higher. We saw a bit of a move up and then a drop off again, a bit of a move up, and then at this point, I was happy to get out. I had secured enough of a profit to make this trade worthwhile and to just close, get out, and then potentially in the future we can get back in and hopefully ride it back up to the original take profit at the daily highs. So yeah, this is how simple it is. We're just following the trend with the moving averages. We used the RSI and the GoldenGates algorithm, a little bit of the pivot points, and of course the second entry was all due to the GoldenGates entry signal here. So very, very simple trade, very easy to do. And this is basically the whole methodology of the Echo model. It's just trying to get into these trends within pullbacks, and that's exactly what we managed to do. And these trades were called inside the Discord for the members. And yeah, we made a great return on this. So that's it, very simple. I hope this was helpful for some people. Hopefully it shines a light on, these trades don't need to be difficult. You don't need to do lots of complex analysis. You just need to go with the market, go with the flow, don't fight it. And just, sit, swing and chill, as they say, or set and forget, whatever you want to call it, whatever your motto is, just do it and, ride the trends.